Hello guys, welcome to Be Informed. You have seen my many videos on my channel, but today I am talking about cash flow statement. Yes, I'm talking about accounts. By profession, I am chartered accountant. I believe that the more knowledge you share, the more knowledge you earn. So on that basis, today I'm gonna discuss cash flow statement. Here a question is given where we have to prepare a cash flow statement. All the information is given for 2 years, that is 2018 and 2019. 2019 is the current year. 2018's closing balances are given, which will become the 2019's opening balances. And the figures given under 2019 are the closing balances of 2019. Here we can see that information is given regarding cash dividend. The company declared cash dividend of rupees 22,500 during 2019. One thing is very important, guys. Whenever you are dealing with cash dividend, it is very important to see that whether it's a paid cash dividend or it's a declared cash dividend, because here the company has declared cash dividend. And if you see the above accounts, you will not find any account related to dividend payable. So this means that no cash payment is made in relation to dividend, or no cash payment is received in relation to dividend. So here we have to be careful while dealing with dividends, that what the payment is, either the payment is made or it is just the declared dividend. Because most of the time this is the point where the mistake is done in exams. So be careful about this information. So guys, in case we are given with dividend payable account, then in that case we will make adjustment of this amount with that amount. We will take this amount to dividend payable account, and there we will make the adjustment, and the final amount we will show in cash flow statement. But here in this case, when there is no dividend payable is shown, so in this scenario, whatever here is given to us, that is cash dividend declared, is rupees 22,500, we will consider this as paid dividend. Okay guys, so this figure is now the whole paid dividend. We don't need to make any adjustment in dividend payable account. So guys, let's take a look at other information. In other additional information, it is said that machinery costing rupees 20,000 is sold at price equals to its book value rupees 12,000. So guys, here one thing is very important that you have to keep in mind whenever you are dealing with fixed assets. Here I'm talking about tangible fixed assets other than land. It is very important that this information is other than land. Whenever you are dealing with fixed assets, you have to look at whether the depreciation account is given or not. This accumulated depreciation account, either you have the depreciation account or not. So let's take a case that this accumulated depreciation account is not given. So in this case, we will assume that the machinery shown here is at its net book value. Okay guys, is this clear? That if this accumulated depreciation account is not mentioned, then the fixed asset is always shown at net book value. But in case if we are given with accumulated depreciation, it means here the machinery is at its historical cost, that is the cost at which the machinery was bought. Okay, so this is a very important point. In some cases, in some questions, this accumulated depreciation is not mentioned. So in that case, you will take this value, whatever the value is here, as a net book value. But in our question, this value is historical cost. That is the cost at which the machinery was initially bought. So moving on. So guys, whenever we are making the financial statements, we follow a certain format. So in cash flow statement, we will follow IS 7. So according to that, we will follow the format and all the necessary requirements. So I will write here. So at the heading, we write what the financial statement we are making. For example, in this case, we are making cash flow statement. So we will write this cash flow statement. Okay, so the first heading, subheading that comes under main heading is cash flow from operating activities. So we will write here cash flow from operating activities. So guys, next heading is PBIT. PBIT means profit before interest and tax, or we will write it either net profit. So we can write it either way, profit before interest and tax or net profit. So guys, here one point is very important. We have both options, that either we take profit before interest or we take net profit. It completely depends on the scenario of the question or the information that is given in the question. For example, in this question, we are neither given with the information of interest nor of taxation. So here we cannot calculate profit before interest and taxation. Whenever you find any information regarding interest or taxation in question, then we will take this value. We will calculate this value, which is profit before interest and taxation. But here in our question, as you see, we are not given with any such information. So this is the case where we will take net profit. So now we will calculate how the net profit is calculated. Even we are not given the net profit in the question, but we have to calculate this figure, net profit. So let's see how we will calculate this value. So guys, as I told you that we are not given with the information of net profit. You can see from question that we are not given with information regarding net profit. So in this case, we have to calculate the net profit value. So guys, you have already read, or maybe you know, or even if you don't know, profit is transferred to retained earnings. Profit of the year is transferred to retained earnings account. This is the account where the profit is transferred. So we have to deal with this retained earning profit to calculate the net profit. Guys, it means that the net profit of this current year is also in this figure. So here we have two approaches in accounts. Either we make a T account or we go by statement. T account is more understandable for beginners. So guys, here we will make a T account for retained earnings. I hope you can see it properly. So T accounts is made like this, and at the top we write retained earnings. So guys, in this question, here we are given with the retained earning balance for year 2019. So for retained earning, we start with credit balance, and here we will write balance brought down. For brought down, we write abbreviation B/D. It means brought down. 2018's ending balance becomes 2019's opening balance, or we say the brought down balance for 2019. So this 30,000 is the brought down balance for 2019, and closing balance for 2019 is this 80,000. So our account starts with this opening balance figure of 30,000. So here we will write 30,000. So our opening balance for retained earning is 30,000. So guys, on this side we will write the closing balance. So this closing balance is carried forward, and this figure is the closing value of retained earning for year 2019. So this becomes the closing value of retained earnings. So this will come here. Now guys, we know that retained earnings are reduced by the values, dividends, reserves made by the company. The opening balance comes on the credit side, and if we want to reduce this 30,000 retained earning, the entry will be made at the opposite side of the account. So now we will make the debit entries for this retained earnings to reduce this amount. We find the general reserves. This general reserves amount is given here. But guys, here the two amounts are given for 2018 and 2019. And here we can see that in 2018, which is the opening balance of 2019, was 75,000. But at the end of the year 2019, this amount becomes 1 lakh. It means more general reserves are created. The difference of this amount is the amount that is for general reserves for 2019, and that amount will come in retained earnings account on debit side. So here the difference is 25,000. This difference will be considered in retained earning account. I am writing the abbreviation for general reserve, and that is 25,000. Cash dividend is given, that is rupees 22,500 is declared by company. Here the word declared is very important. So guys, if we are given with the cash dividend paid account here, then we will make the adjustment of this amount with that figure. But here no information is given regarding cash paid for dividend. So now whatever is given here will go to retained earnings account. So guys, keep this in mind. I repeat. So here I will write cash dividend, which is 22,500. So now we will make a total of this debit side first. So this becomes 1,27,500. So this is the total of debit side. So here we will also write the same figure, that is 1,27,500. Now we will complete the retained earnings account by finding the missing values. So here one figure is missing, that is net profit, 97,500. So this value is our net profit. We have just done the reverse calculation. So guys, now let's have a look at retained earning account in statement form. I told you T account first because it is very logical and easy to understand. But the statement form is also, you should also understand how the statement form, because it is more presentable. So let's see how retained earnings account is made and net profit is calculated in statement form. So first of all, we will write retained earning closing balance. So we will start with closing balance figure. So first we will write retained earning closing balance or carried forward balance, that is 80,000. Okay guys, then we will write retained earning brought down balance or opening balance. That is 30,000. This figure will be deduced from this 80,000. That is, we will deduct 30,000 from 80,000. That is, this figure is minus. For minus, we show the figure in brackets. It means that 80,000 minus, so this comes, so this comes 50,000. Now we will write the debit entries. What debit entries we knew? We know that general reserves figure is 25,000. We calculated. So general reserve. It's 25,000. All debit entries are added. Credit entries are deducted. Because we have taken the closing balance, that is the debit entry. So these amounts will be added to this figure. Okay, so 25,000 will be added, and then we have cash dividend. So all these figures are addition. So we will write here 22,500 and we will add these and it will become, let me calculate. So here the figure comes is 97,500. So you see guys, the answer is same whatever we opt for, either we go for T account or the statement form, the answer is the same. But here the simple logic is that if you are taking the debit value, you have to add the debit figures, and if you are taking the credit values, you will add the credit figures. But in this T account for beginners, it is very obvious because you will add these, this side, debit side, and the balance will be same on both debit and credit. Whatever figure you are left with will automatically come. So you can find the same answer with either this or either that statement form. It's your choice. So guys, now we will write our net profit figure to our cash flow statement. Here. So our net profit is 97,500. So now we have to make some adjustments. We will write here adjustments. The first adjustments from net profits are non-cash adjustments. So guys, now here we need to understand what are the non-cash items. As it is clear from its name, non-cash items are basically those items in which, those payments in which directly the cash is not involved. For example, depreciation, we show this as a payment, but this is not actually a cash payment or cash deduction, in which depreciation doesn't involve any cash. Similar payments are bad debts, loss on sale of fixed asset, for example. This is also a non-cash item. So these are the adjustments that we have to make in net profit. And how we make these adjustments? So whatever the values which are deducted in income statement are added in this net profit to calculate cash flow. That is, every non-cash item will have a reverse entry. If it was previously added, here it will deducted, and if previously it was subtracted, here it will be added. Because it's a non-cash item and we are calculating cash flow statement, so we don't want any non-cash items. Okay, I hope my point is clear. So guys, the first non-cash item that we have in our question is depreciation. But whenever you are dealing with depreciation, you have to be extra careful, because most of the time in questions, additional information regarding machinery, regarding fixed asset or depreciation is given most of the time, in most cases. So whenever you are dealing with depreciation, always carefully read the additional information. In additional information, you will always notice, if it is related to the fixed asset, you will notice that you have to make some entries regarding depreciation. It is not the case that you just take the opening balance of depreciation and the closing balance of depreciation, you deduct these and you write the figure here. No, this is not the case, because we are given with an additional information regarding machinery. So you are understanding my point here? Direct depreciation is not mentioned, but we have to make an adjustment in this accumulated depreciation account. So guys, you can see that machinery cost is 20,000. Okay, the machinery's actual cost is 20,000 and is sold at its book value. It means that the time when this machinery was sold, its book value was 12,000. It means that it was depreciated over the time from 20,000 to 12,000. So difference between will give us the depreciated amount, which is 8,000. So whenever an asset is bought, even in that case, we have to make some adjustment in depreciation account. So now we will make an accumulated depreciation account and we will make the adjustment, and then the final figure we will write here in non-adjustments item depreciation. Okay, so let's first make a accumulated depreciation account. So guys, here we will make an accumulated depreciation account. So here on credit side, we will write balance brought down, as we write it in retained earnings account. So the first entry is balance brought down. So this we are given here with 45,000, which is the, please always keep in mind, for we are making the cash flow statement for 2019. So whatever the 2018's figures are, they will become the opening balance of 2019. So this 45,000 will become the opening balance of this accumulated depreciation. So that is 45,000. Okay, and here that is closing balance is 65,000. So we will write this closing balance 65,000. Okay guys, now carefully and listen that here we have sold an item, machinery item, over which 1000 minus 12,000, that is 8,000. So this machinery item is sold. So now we have to make an adjustment for this 8,000 sold machinery. Okay, so we know that as we have made this accumulated depreciation account, we know that the depreciation addition entries are made on credit side. And it means that whatever you are adding in depreciation will come on credit side. Okay, so now we are reducing the depreciation, that is 8,000 depreciation is going to be less. So in that case, this 8,000 depreciation will come on debit side. Are you understanding? I hope you are understanding my point. So 8,000 will come on debit side of accumulated depreciation. Okay, as double entry system works, so we have to make the other entry on which account? This account is called disposal account. So disposal account is credited with 8,000. So guys, here we will also do the reverse calculation as we did in retained earning. First we will add up the debit side, 73,000. Okay, we will also write 73,000. We are calculating the depreciation for 2019. Okay, so what figure will come here? It is depreciation. If we will minus 45,000 from this figure, depreciation for 2019 will come. This figure is 28,000. So this is the figure that we will use in our cash flow statement as a non-cash item adjustment. So guys, here I told you that whatever the entries are deducted in income statement will be added in this net profit adjustment. So depreciation is a minus entry in income statement. So here we will add the depreciation expense. Okay, that is, so here we will write the amount of depreciation for this year. Here you can either make a separate column or you can just add on to the main column. It's totally optional. Here we can do it like all the additions made in a separate column and then the total sum of all the additive non-cash items are added to the main figure, but that is totally optional. You can make two columns and then you can do it. Okay, moving on to next non-cash item, it is patent. So guys, next entry for our non-cash item is patent. Here when we see at the information given, we see that patents are decreasing. For 2018 its value is 5,000, whereas for 2019 the patent's value is shown is 4,000. But if we see at additional information, no additional information regarding patents are given. See, we are not told that either any of the patents are sold or decreased in any way. So it means that patents are amortized. So we will find the value of amortization of patent and that value is non-cash item. That item will be adjusted here. So the adjustment value for amortization is, it is also an add to the net profit, because in income statement we have deducted this amount, the amount of amortization. So amortization on patent from 5,000, it is in 2019 it is 4,000, so the change is 1,000. So we will add this 28,000 and 1,000, and this total will be, we will write here, it's 29,000. So the next comes working capital. Working capital. So any change in working capital will be either added or subtracted to this net profit. So all the non-cash items are done here, and this is the other heading of working capital. Now we will see what working capitals are given to us. These two adjustments were only available for non-cash items according to this question. Okay, we see we are not available here, no other non-cash item is available. If there is any bad debt item or any loss on sale of fixed asset, for example, if this machinery item is sold at loss or profit, we will make an adjustment for this value here in non-cash items. For example, gain on sale of property or fixed asset will be subtracted here, and loss on machinery item sold will be added here. But here the machinery item is sold at its book value, that is, there is neither loss nor profit, so there is no adjustment of this. So guys, this was the heading for adjustments non-cash items, and now we are dealing with working capital. Working capital includes current assets and current liabilities. It means any changes in current assets and current liabilities will be either added or subtracted here. So let's see what working capital is mentioned here. Okay, so guys, first I think I should make you clear that whenever there is an, let me fix the camera. Okay, so the very simple rule is that whenever there is an increase in current assets, you can write it as like, whenever there is increase in current asset, this increase will be added in, this increase will be subtracted from net profit. Whenever there is increase in current asset, let me repeat this, whenever there is increase in current asset, this will be deducted. Whenever there is increase in current asset, this amount will be deducted here to calculate the cash flow statement. And whenever current assets decrease, the decreased amount will be added back to net profit. Okay, the similar is the case with current liabilities. Whenever there is increase in current liabilities, this amount will be added back, and whenever there is reduction in current liabilities, this amount will be subtracted. There is a full logic behind this rule that can be discussed in some other video, but here you can write it as I have shown you to memorize the rule. Okay, whenever the current assets increases, the increased amount is subtracted from this net profit value to calculate the to make the cash flow statement. Okay, and any decrease is added back. So this is a very simple rule. Inshallah, we will discuss this rule in some other video, but here you can see it as I have shown you on this paper. So now let's take a look at the information given to us. So guys, we know that account receivable is current asset. This figure is our current asset. In 2018 closing balance, that is 2019 opening balance, this figure was 35,000, but it has increased till the end of the year to 53,000. So there is an increase of 18,000. Okay, so this increase is, I have shown you that any increase in current asset is subtracted. So we will subtract this 18,000 from this net profit. So we will write it as subtract increase in accounts receivable. Okay, this is a current asset. Okay, the value for this increase is 18,000. So we will subtract this. What else we have? This merchandise inventory. This is also a current asset. This now see is decreasing from 60,000 to 50,000. So there is a decrease of 10,000. So now adding the amount of decrease in merchandise inventory, it is 10,000. Sorry, this 10,000 is not written in brackets. This is addition. Only the subtraction is written in brackets. By mistake I put the brackets. So this is the add in amount. 10,000 will be added in. So guys, we have done with accounts receivable, with merchandise inventory. These both were current assets. We have done the entries for these. Then machinery, it is fixed asset. Land is fixed asset. Patents, intangible fixed asset. Accumulated depreciation we have done in non-cash items. Then comes accounts payable. This is our current liability. So for current liability, we see from 40,000 to 42,000. So there is an increase in current liability. And as I told you, for any increase in current liability, the amount is added back. So 2,000 will be here. The 2,000 will be added back to net profit. So increase in, so we will write it as increase in accounts payable. Increase in accounts payable. So this will be added. The amount for this is 2,000. The amount for this is 2,000. So now let's calculate. So the figure for this comes as negative, because this is 18,000 minus 18,000 and plus 12,000. So the figure comes as minus 6,000. So the total of this is minus 6,000. So now so guys, from this net profit 97,500, this non-cash item figure 29,000 will be added, and this working capital that is in negative 6,000 will be subtracted. So net amount will be written in as cash from operating activities. So we were calculating cash from operating activities. So now we will write here the balance, that is so this amount is our cash from operating activities. We will write it here. Cash from operating activities. So this is our cash from operating activities. So guys, here we can see that the cash from operating activities is a positive figure. It means that cash from operating activities is generated, that we have gained the cash from operating activities. But in opposite case, if this figure comes negative, it means the cash is used in operating activities. The minus figure will show the amount of cash consumed in operating activities, but this is the amount that we have generated through operating activities because it's a positive number. Okay, now the next heading after operating activities is cash flow from investing activities. We also generate cash from investing activities. So our next heading is cash flow from investing activities. Okay, so now we will have a look at what investing activities here have generated cash or consumed cash. So guys, here now we will see what investing activities are here. Investing activities can be either fixed asset, sale, purchase. It can be either long-term investment by the company. Company can either make investment by buying securities or bonds in other companies. These are all different kinds of investing activities. Investing activities may also include the interest received on that long-term securities. So this is also an investing activity. But here we are not given any interest information, so that is just an extra information. But here we will see what changes in assets are done here. So here we have seen that in additional information, it is mentioned that a machinery item costing 20,000 is sold. So there is a change in fixed asset machinery. So now we will have to make machinery account, and there we will see what changes in that account are made during this sale. Okay, so we have to make a T account for machinery. So here we will make a machinery account. Here we will write machinery account. So we know that the machinery account brought down balance comes on debit side. Okay, so the opening balance will come here. So what is the opening balance? Let's see. Okay, so the opening balance for machinery is 25 and the closing balance will be written here for machinery. From here it's given the closing balance for machinery is this. So now this is the BD balance and this is the CD balance, that is closing balance. But we know that one machinery item is sold. In additional information, it is given that one machinery item is sold. So guys, here we have seen that the machinery item is sold at book value, that is 12,000 rupees. And one important point that we have to take account in dealing with fixed asset accounts, that is depreciation. That I told you at the start of the video, that whenever we are given the accumulated depreciation account, it means that machinery shown here is at historical cost, that is the cost at which the machinery was actually bought. Okay, so now what value we have to put in the machinery account for this disposal item? As the machinery here in above accounts is shown at historic cost, we will also take the value of disposal item at historic cost, not the book value here. Okay, the disposal value will be this 20,000. So this 20,000 will be mentioned here in this account. So this disposal machinery item is written as 20,000 and this account is written as disposal. This disposal account will be debited with this amount, and in machinery account it is credited with this 20,000 account, because this 20,000 amount of machinery is sold out during 2019. So the opening balance, sale of the machinery item, and then the closing balance. So these three figures were given. Now we will calculate the total of credit side. It becomes 3,70,000. It means this side is also 3,70,000. Okay guys, so from here we can calculate one figure that is missing here. So when we subtract this amount from 3,70,000, it comes 1,15,000. So this 1,15,000 is an addition to this opening balance of machinery. Okay, it means that we have purchased machinery of 1,15,000 because this is an addition to 2,55,000. Okay, so this is the purchase of machinery. This we will write as purchase account. Okay, this is the new purchase in year 2019, and this is the disposal, that is the sale of item, and this we have accounted as at its historic cost. Okay, so this we wanted to find out. This was missing value, and to find out this value we did the reverse calculation. So guys, this item, that is the purchase of new machinery at 1,15,000, is an expense, that is cash flow from investing activities, because fixed asset is purchased. Now from cash flow from investing activities, this purchase of machinery item is deducted because it is an outflow of cash. So here we will write minus purchase. Purchase of machinery. $1,15,000. So this is an outflow of cash, that's why we will deduct this value. So purchase of machinery we have done with that, but here in additional information, one more information is given regarding the sale of the machinery. The machinery item that is sold is rupees 12,000. Okay, in indirect method, only in operating activities all the indirect costs are accounted for, whereas all the direct costs are taken into account. So guys, in investing activities, the cash flow from purchase of machinery we have done with that, but here an additional information is also given regarding the sale of the machinery. So here the important point is that now which value to take for the sale of machinery. In machinery account we took this 20,000 value. Okay, because here the machinery account was maintained at net book value. At the historic cost value. So that's why we took the historic cost. But now when we are calculating the cash flow from investing activities, we will only take the direct cash that we are receiving, and this is the amount 12,000 that we are actually receiving for the sale of this machinery item. So we will write here 12,000, not 20,000. 20,000 is the actual cost, but we need here the actual cash we receive at the sale of the machinery item. Okay, so this cash is inflow, so 12,000 will be added back. So moving on to other fixed asset. In our question, land is the other fixed asset. Machinery we are done with. Next one is land. So land, we can see that opening balance is 15,000 and the closing balance is 50,000. It means there is an increase in land. The land is purchased. So simply we will write the outflow of cash from here. So this is the outflow of cash purchase. It is deducted. Purchase of land, it is 35,000. So this amount is deducted because it is an outflow of cash. So we will calculate the total. These both are negative values and this one is positive value. So the total amount will also come negative. That is 38,000. So this value is also 1,38,000. This is the cash flow from investing activities. Okay, this is cash outflow. So the next category is cash from financial activities. This we will write it as cash flow from financial activities. So financial activities of a company includes all the activities that are related to finance. For example, if the company issues shares or if any long-term loans are taken, debentures issued, bonds issued. So all these are the activities. So these are all the activities which involves finance. So these activities are covered under cash flow from financial activities. So here we see a long-term loan. A long-term loan value, opening balance is 50,000. Whereas the closing balance is 75,000. It means there is an increase in loan value, which means that there is an inflow of cash. Now cash has increased due to this loan value. So difference will be the difference in this amount. These two amounts will be considered as inflow and will be added here. It is written here as cash from long-term loan, and the value is 25,000. This 25,000 is added in because it is an inflow of cash. So the next item under this category according to our question is share capital. Share capital is also a financial activity, and here we can see that there is an increase in share capital from 150 to 175. So this increase is also a cash inflow. So this amount will also be added here under financial activities, cash from share capital. So write it as cash from share capital. It is also 25,000 increase. So next item under this category is dividend. In additional information, we see that the dividend is paid. Dividend paid is 22,500. This is the outflow of cash from financial activity. So this will be deducted from this total. So we will write it as, so dividend paid is minus amount dividend paid, and this amount is 22,500. So now after calculating, the answer is positive. These two will be added, and from that this will be deducted, and the answer comes 27,500. It's a positive figure, so it means the cash from financial activities, so cash is generated from financial activities. We will write it as cash from financial activities. First we made the cash from operating activities. This positive figure is the cash from operating activities. Then we calculated the cash from investing activities, which is a negative figure, that is cash is used in investing activities. And then we see here 27,500, it is the cash from financial activities. When we calculate these, the answer comes, so we will write it as net increase in cash, that is 10,000. Okay, so this 10,000. Now let me show you. If we see, the opening balance of cash is 20,000 and the closing balance of cash is 30,000. It means there is an increase of 10,000. Okay, so this should be the same amount when we calculate net increase in cash. It is also 10,000. But now let's see how we will present it. Now we will add in opening balance of cash. What is the opening balance of cash? It is 20,000. So when we add this, the answer comes 30,000. And it should be the same as the closing balance of cash mentioned here, which is same 30,000. So it means we have done the right calculations. So we will write it as closing balance of cash. This is 30,000 at the end of 2019. I hope I have explained the cash flow statement to you clearly. If you have any doubts or questions, you can write it in comment section. Thanks for watching. Take care.